Neuner, I guess you're supposed to, they spelled it wrong. You're making a bold prediction, $250,000. Is that your prediction?
So I think, yeah, I am pretty confident that by the end of the cycle we'll be at $250. That's really where I'm positioning myself. Like, there we go. So you can actually see when you look at the Bitcoin chart and you look at the 4-year cycles, generally we peak in 2017. We peaked in December of the post-election year. In 2021, we peaked in November of the post-election year. And if the cycle is to perpetuate itself and we're going to carry on in the same kind of cycle, then we could probably assume that in the next 3 to 4 months, the cycle actually tops. And I mean, yeah, so that's pretty much where I think we are right now in the cycle. And that's pretty much kind of like the lay of the land.
According to Ron Neuner, the bull market has officially entered its most explosive stage, when the largest gains typically occur in the shortest period of time. He likens it to the previous cycle in early 2021, just before Bitcoin saw a parabolic surge. He believes that we are currently in that same situation, and he wouldn't be shocked if Bitcoin shot upwards $150,000 in the next 2 months. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Are we seeing a rotation from the Bitcoin side into everything else? Is that going to sustain?
So I think let's just quickly look at where we are in the Bitcoin cycle. I'll actually show you something quite interesting when you look at the Bitcoin cycle, if you'll just allow me to share my screen. So
go ahead.
I'm going to share my screen. That is the Bitcoin chart. And if you look at the chart over here, what you realize is this is effectively the chart of the crypto bull market, right? Now, if you look at how this crypto bull market usually plays out, you can see that you get a lot of consolidation, and then you get a climb, and then you get a lot of consolidation, and then you get a climb, and then you get a lot of consolidation, and then you get a climb, and you get a lot of consolidation, and then you get a climb. The interesting thing here is that every time we get a climb, it's about a 50% climb, right? So I'll show you this. So we went over here. Once we broke out of this rally over here, we went up here and we hit, that was 50% higher, as you can see over there.
Yeah.
Then we consolidated in this level for quite a while. And if you take this level and you say, okay, well, how do we rally from the time we actually broke out, which you could say this is the area of the breakout. Well, we were up like 60% over here. Then again, we consolidated. We broke out of the consolidation range here, and we broke up here, and that's about a 60% climb to the top. And then we consolidated again over here. And so from the period we consolidated and we climbed over here, we consolidated about 50% or 40%. So what we're getting is we get this sideways accumulation, and then we get these massive breakouts from Bitcoin, which land up being around 50%. That's the average. The average is around 50%. Now, this time we had the consolidation, and we broke out of the consolidation, and we so far have only climbed about 11% from the breakout to the top, which means either the momentum slowing down or we were in the midst of quite a big move. So as you can see with all these other moves, you have a little bit of a leg up, you have a little bit of a consolidation, and you carry on moving. You kind of had a similar pattern over here. You broke out of here. You had a little bit of a consolidation over here, and you carried on moving. And I mean, again, the pattern is quite clear here. You went up, you had a little bit of a consolidation, and you carried on moving. So if I were to bet, I would say that we're in this 4-year cycle. We're at the end of the 4-year cycle. We're nearing the most aggressive part of the 4-year cycle. This is when most of the returns are made. It's akin to the 2021 4-year cycle, or the 2021 post-election year. You can see what happened in July, which is, it's quite like we're in July of the post-election year, and we peaked, and then we dipped, and then as you can see over here, we're now going into the second part of the rally, which actually puts in a higher high. So if history were to repeat itself, I'd imagine that this chart continues to go up. If I had to put my name to a number, I think probably next up is around $150,000 on Bitcoin. And as you rightly pointed out, when you look at the Bitcoin dominance chart, this is also usually the part of the cycle where the dominance usually falls off a cliff. So I'm going to quickly just take us to the weekly because it just feels like a better chart to look at. We're looking at the 2017, again, post-election year. The dominance falls off a cliff and people rotate into altcoins. 2021, same thing happens. Dominance falls off a cliff and people rotate into altcoins. And I guess you can kind of say that maybe now the dominance needs to fall off a cliff. We had a trend line which was broken over here. I mean, I'll draw a very loose trend line for you here just because, here we go. Trend line looks something like that. The dominance broke below the trend line. And there's another chart which, if you want to look at, is probably worth looking at it. And that's the ETH BTC chart, which shows you ETH, the biggest altcoin, against Bitcoin. What you can see is that this chart has been in a downward trend for a long time. And what you can see is that you're finally getting some chance, some semblance of recovery in the ETH BTC chart. So all in all, it's looking extremely bullish. Like the setup seems bullish. ETH is getting strong. Dominance is dropping. Bitcoin is halfway through another move. And timing-wise, what we know when we talk about timing-wise, and I'll actually have a look here if I can see if I can find a chart here for you. So I've got a chart here which I'm going to try and pull up for us, which actually shows us the 4-year cycle. And what that chart is going to show us is it's going to show us that okay. So here are the Bitcoin moves that we actually spoke about. Remember I said to you that they all 50%. So you can kind of see the chart a bit better there. I want to see if I can find. Here's the one of the. I think it's this one here with the 4-year cycles. There we go. So you can actually see when you look at the Bitcoin chart and you look at the 4-year cycles, generally we peak in 2017, we peaked in December of the post-election year. In 2021, we peaked in November of the post-election year. And if the cycle is to perpetuate itself and we're going to carry on in the same kind of cycle, then we could probably assume that in the next 3 to 4 months, the cycle actually tops. And I mean, yeah, so that's pretty much where I think we are right now in the cycle, and that's pretty much kind of like the lay of the land.
Rand highlights MicroStrategy, which he describes as Michael Saylor's great strategy. Using well-known instruments like convertible notes, Saylor created a bridge enabling Wall Street to invest in Bitcoin rather than depending solely on the tiny $4 trillion cryptocurrency industry. As a result, the enormous $80 trillion traditional debt and equities markets became accessible. What was the outcome? The development of Bitcoin benefits shareholders, and fixed income investors profit from the notes. This method is a clever, scalable, and effective approach to invest large sums of money in Bitcoin. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Neuner, I guess, is you suppose they spelled it wrong. You're making a bold prediction, $250,000. Is that your prediction?
So I think, yeah, I am pretty confident that by the end of the cycle we'll be at $250. That's really where I'm positioning myself. I think that if you look at how aggressive the last 3 months of the cycle usually are, and again I'm going to call up the charts again just so that you can see, I'm not basing this on a thumbsuck. I'm actually basing this on historical data. So look at how aggressive the last 3 months of the bull market generally are. And look at how aggressive the last 3 months of the bull market were actually up here. That's when the cycle goes parabolic. And so I wouldn't be surprised if we actually had 150,000 pretty soon. Let's say pretty soon, August, September, and then I think for the end of the cycle, 250,000. That's pretty much where I think we're going to land up. No, end of 2025. So I think the end of the cycle comes. I mean, again, if history were to repeat itself, the cycle generally tops. The cycle generally tops at the end of the post-election year. Now, I would love to see a longer cycle. As a crypto investor, I'd love to see the cycle go a bit longer. And there is a good chance that the cycle will go a bit longer. And the reason why there is a good chance is because we haven't started rate cuts yet. So now the question is, when will we get rate cuts and why will we get rate cuts? If we get a gradual easing of rate cuts, which would fall into this soft landing narrative, then I think the market rips and then we could maybe continue the run into 2026. But we could get a COVID type scenario. The last two times that rates came down aggressively was 2008, where rates came down aggressively because of the housing market collapse. And then 2020 when around COVID time, and that was because of a pandemic, right? So, I hope that rates don't come down because of one of those kind of things. And as long as rates come down pretty gradually, then I think we're in for a home run. Powell's pretty steadfast. He ain't budging to the Trump pressure. He's working on the data, and I think he kind of hinted that the first rate cut was going to be in September. And the market's pricing in one rate cut in September and then another rate cut in December. And that's what the market's starting to price in. And I think when they're pricing in a rate cut, they're pricing in a 0.25 or 25 bips rate cut. So I think our best case scenario is we're getting a 50 bips rate cut this year. I think that's the best it can be. Okay, well, let's talk about what actually generally crashes crypto markets, right? So what usually crashes crypto markets is leverage, right? So the first, and I think it's really what happens with every market. If you think about the property market in 2008, what crashed that property market? Leverage, right? Excess leverage. Now, what do we define leverage as? Leverage is defined as money that doesn't exist in a system being used to prop up asset prices. That's basically leverage, right? And so 2008, if you look at the underlying, basically the banks created fake money. They created these fake, not fake mortgages, but mortgages that were hardly backed. And that propped up the property prices until the bubble popped. Look at the previous crypto cycle, the Lunar cycle, 2021. It was all fueled by a synthetic dollar which was created, an algorithmic dollar which was created. There was billions and billions of dollars of this dollar, and when the pin popped the bubble, the leverage cascaded and the whole market collapsed. So what I ascertain is that most market crashes, most market collapses are caused by leverage collapses. And I think this cycle is going to be no different. And the reason why I think the cycle is going to be no different is we have a different type of leverage in the market this cycle. Let me explain it to you very simply. Michael Saylor, who's a genius, by the way, created a vehicle called, he had a company called MicroStrategy. And what he created was he created a way for crypto assets to attract Wall Street money. And by Wall Street money, I mean two pockets of Wall Street money, equity and debt. So by doing that, he took a very small crypto market, which is a $4 trillion crypto market, and he opened it up to $80 trillion of assets, right? Debt and equity assets are estimated at $80 trillion. And what he did was he created a very smart, through very, very, very smart financial engineering, he also created a playbook of how to expose fixed income investors to Bitcoin returns. And he did that with a fixed income instrument, which is a convertible note, which converted into equity. And the equity obviously appreciated if the Bitcoin price went up. So genius financial engineering, genius leverage. Michael Saylor created a playbook, which is great. That playbook allowed him to grow his share price faster than pretty much any share in the NASDAQ. It created a lot of shareholder value. And I think it was very genius. Okay, fast forward a little bit later. He shares the playbook with the market. He's pretty open about the playbook. And we get a whole lot of new treasury companies launching. MetaPlanet, which is a Japanese one, and a whole lot of other Bitcoin treasury companies that have launched. Now, the one thing about these treasury companies is they trade at a premium to the net asset value of the crypto that they hold. Why? Because they're tapping debt markets or fixed income markets. So equity holders only have to repay the debtors, and then it's like any company. You get a higher return on shareholders when you can return a rate higher than you're paying your debt holders. It's like any company in the world. Okay.
He clarifies that leverage is the true threat. Excessive debt is a key factor in every significant market fall, including the 2008 housing crisis and the 2021 cryptocurrency collapse. In essence, leverage is the process of raising asset prices by employing funds that aren't actually in the system. The bubble bursts and values plummet when that borrowed or fictitious money is removed. Rand cites Michael Saylor's MicroStrategy as an inventive yet potent illustration of how leverage might be used to get into the cryptocurrency market. Saylor managed to bridge the gap between the $80 trillion traditional financial world of debt and equity and the less than $4 trillion cryptocurrency sector. He built a bridge for Wall Street to invest in Bitcoin through clever financial engineering, mostly using convertible notes, allowing shareholders to profit from the price appreciation of Bitcoin, while fixed income investors may get returns. These days, a lot of Bitcoin treasury companies are appearing, including ones in Japan and even brand new Ethereum treasury firms. As long as the value of cryptocurrency continues to rise, these companies will be able to raise capital to purchase cryptocurrency, trade at a premium to their assets, and provide shareholders with larger profits. However, Rand cautions that this is still leverage. The same financial structure that boosted gains might increase losses in the event of a rapid price shift, possibly leading to another major market collapse. He concludes by noting that Ethereum co-founder Joseph Lubin is now establishing an Ethereum treasury firm through an entity named SharpLink, soliciting $425 million from leading cryptocurrency funds to implement the same debt-powered model for Ethereum. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.